Introduction. United Plantation's story is about shared heritage found on Danish and Malaysian expertise and resources. From a modest beginning in 1906, United Plantation Berhad has over the years grown in size and stature to emerge as one of the largest plantation groups in Malaysia. United Plantation Berhad is committed to a mission centered on sustainable growth and responsible stewardship within the palm oil industry. United Plantation Berhad operates within a well-defined organizational structure that reflects its rich history and commitment to excellence. The company's structure encompasses various divisions, including plantation management, milling, refining, and downstream activities. Our constant focus on responsible agriculture made UP the world's first certified producer of sustainable palm oil in accordance with the principles and criteria of the Roundtable on Sustainable Palm Oil, which is RSPO, on 26 August 2008.
Through a comparison of particular items or ratios in the financial statements, a company's financial status can be assessed over time using a technique called horizontal analysis. This rise in financial position of the company can represent the company's dedication to business growth and could entail expanding its presence in already existing areas, breaking into new ones, or introducing new goods and services. The company's increased profitability may be the catalyst for an increase in total equity.
Vertical analysis is a method of financial statement analysis that expresses each line item as a percentage of a base figure. The United Plantations Company percentage in finished goods is increased from negative 0.51% to 2.03% for year 2021 until 2022. The higher cost of raw material or additional labor expense might have lead to an elevated percentage in change in finished good. This is particularly important to investigate as rising production costs can impact the company profitability and operational efficiency. Next, profit from operations increased by 29.36% to 32.76% from year 2021 until 2022. The percentage of profit from operation increased when operating profit became a larger proportion of total comprehensive income. Besides, net profit for the financial year is increased from 22.67% for 2021 until 24.08% for year 2022. This rise can represent the company has successfully implemented cost-cutting measure or improved operational efficiency. It may result in a low cost of goods sold or operating expense as a percentage of revenue.
Financial ratio analysis is a quantitative method of gaining insight into a company's liquidity, operational efficiency, and profitability by studying its financial statements such as the balance sheet and income statement. In this report, we will be conducting financial ratio analysis for United Plantations Berhad. The financial statements of United Plantations Berhad are taken from Bursa Malaysia, where we obtain the information for the financial ratio analysis. The first financial ratio category that we calculated is liquidity ratios, which include current ratio, quick ratio, and net working capital. The second category is leverage ratios, where we calculated debt ratio and debt equity ratio. The third ratio category is activity ratios, including the average collection period, accounts receivable turnover, and total assets turnover. Finally, the last financial ratio category is profitability ratios, where we calculate the gross profit margin, operating profit margin, and net profit margin, and return on assets. Thank you.
The current ratio for company does not necessary in good investment because it was above 3 in 4 years. For quick ratio, it was decreased from 2019 to 2021, and it increased to 4.88x in 2022. For net working capital, it shows increase from 2019 to 2022. And the debt ratio, it also was increased from 2019, which was 3.6%, until 2020, which was 6.2%. And the debt equity ratio also increased from 2019 to 2022. For average collection period, it was increased from year 2019 to year 2021, and it was decreased to 23.32 days in year 2022. But for account receivable turnover, it was decreased from year 2019 to year 2021, and it increased to 15.65x in 2020. For total asset turnovers, it was increased from 2019 to 2022. Because of the low cost of production, gross profit margin increased until 30% in 2020 and it decreased until 26% and continued to decrease until 24% in 2002. The operating profit margin increased from 2019 to 2020 and decreased to 2021 and maintained until 2022. Last but not least, net profit margin increased from 2019 to 2021 and decreased to 2022.
Hi, my name is Tanajmi. Now I would like to give some recommendation to United Plantation Berhad. A review of United Plantation Berhad financial statement can give prospective investors cause for both concern and hope. The company's notable 2021 recovery, especially in terms of return on assets and a notable increase in earnings per share, suggests a fruitful period of recorruption. And decreased ROA in 2022 suggests that the business is not making the best use of its resources to produce revenue. This efficiency is a bad indicator for future growth and frequently result in lower profitability. The corporation may be making more profit, but its profit per share may also be declining, as indicated by the notable decline in EPS between 2021 and 2022. A lower EPS might be a symptom of non-potential growth and frequently denotes the lowest profitability. Next, conclusion. A mixed picture is shown by United Plantation Berhad financial study from 2019 to 2022. Positive developments include better working capital management and increased short-term financial stability as shown by improved liquidity ratios such as the current and quick ratios. Furthermore, the organization has demonstrated resilience and flexibility as seen by the noteworthy percentage changes in important financial variables found in the horizontal study. But there are also issues, especially with profitability. The business has gone through phases of negative net profit margin as well as diminishing gross profit margins. Its capacity to continue being profitable on a constant basis is called into question by this. In addition, the company's strategic shift in financial goals is shown by its reliance on debt financing, which is reflected in variation in the debt-equity ratio and a purposeful reduction in dividend payments. Thank you.